Hi everyone, I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical precious metals brokerage house specializing in gold and silver and helping clients develop their own personal strategies. I'd like to welcome you today to Coffee with Lynette and my very, very special guest. I'm so excited that he's here, Ernie Vertimos, a trader of futures. Hi Ernie and welcome. He
Thank you,
brings,
Lynette.
oh, it's so good to have you here. But he brings 35 years of experience in both finance and technology as the former chief architect and chief technologist at Sun Microsystems. So that is no small event. And we have a lot of people with a lot of questions about technology. So this should be a very good fit. And he also helps individuals learn how to actually trade futures. So let's just get right into the meat of it because I know we're going to have a lot of questions. And I want to start out with what's been happening as a trader from your perspective, what you see has been happening with the markets with the interest rates.
So I'm like you said, I'm a futures trader. I trade the yield curve, and a lot of people might not know exactly what the yield curve is, but it's something that economists watch because it's, in a lot of ways, a foreteller of what might be happening in the near term and medium term to the market. And the yield curve really tracks interest rates, and I trade interest rate futures, which are interest rates on treasuries. And Treasury futures is one of the biggest and most liquid markets in the world. As a matter of fact, I like to consider it the epicenter of virtually everything that happens financial in the world. I mean, everything kind of emanates from interest rates, right?
Absolutely.
Yeah, and and I would consider myself a global macroeconomic and global macro political analyst when it comes to futures trades, because virtually anything that happens economic or political, some politician says something stupid, it affects interest rates. And
Yeah,
and that happens a lot, by the way, believe it or not.
I believe it.
Yeah.
I believe it.
And so what I do is I trade something called the yield curve, which is a plot of the various maturities of interest rate products. They go from the very short term, which are overnight rates, and that you often hear about the Fed. They're raising interest rates. Well, they're raising interest rates on that overnight lending rate, and then it's kind of like they're trying to affect the entire spectrum of interest rates by changing that one rate. Well, that's only one of the tools that they use. It's kind of like trying to control where a tiger goes by grabbing it by the end of the tail and then shaking it. And so they use that in monetary policy and a bunch of other tools to try to control those interest rates, because those interest rates have a direct effect on how business does business.
Right, right. So the yield curve had been flattening, and you can see this in this relative performance chart on. Now, this is not exactly the futures contracts that you trade, but this is a relative performance between the 2-year, the 5-year, the 10-year, and the 30-year. And we can see here, this starts at the crisis where the yield curve, where the yields were dropping precipitously, and then recently where they were being compressed. Okay, and now, of course, and then that created a lot of market volatility. So, do you want to address what's happening in the markets with the yields right now too?
Well, sure. I mean, if we can go back to 2009, where yields were dropping, which actually means the inverse, that the treasuries were going up,
Right.
and that was all a reaction to the economic crisis that we had in 2009. Now, since then, well, actually before then, let me just talk about, you said the yield curve was flattening, and what does that mean? That means that that's the relative rate between the short-term rates and the long-term rates. Normally, a yield curve, a normal healthy yield curve, is one where longer-term rates are significantly higher than shorter-term rates. And during the course of the economic cycle, as an economy starts heating up, the Federal Reserve, in their infinite wisdom, thinks that, hey, they need to kind of meter that. And so what they'll do is they'll try to raise short-term rates with the idea that that may put a brake on or kind of a brake on the economy. Unfortunately, it doesn't ever seem like they're quite there on time or really understand what they're doing, probably because of that time lag. I kind of liken it to, you get in the shower and, you turn on the water and it's kind of cold. So you dial it up a little bit and you're wondering where that hot water is. And then you keep on dialing it and you keep on dialing it. And then all of a sudden, bam, you get hit with the scalding hot water. And because of that delayed effect. That's kind of like what happens with the Treasury and the Fed. I mean, they keep on cranking up the interest rates, not seeing any kind of effect. They know that it takes 6 months, maybe even a year before those take effect. But by the time that they do, it may not have the proper context, or it may be overdone. And in fact, it's almost always overdone. In fact, that cranking up of the short-term rates, if you don't have a corresponding rise in the the longer-term rates, then the yield curve itself goes from kind of this, from a very steep curve to a kind of a flattened curve, where the short-term rates start rising up like this. Now you might wonder, well, okay, so it does that. What happens to the economy? Well, just as a note, one thing that's happened prior to virtually every recession in the past 75 years, while the Fed is raising those interest rates, it has preceded a recession. So one can make the conclusion or a correlation that recessions are actually caused by the malfeasance of the Fed raising those interest rates, causing a flattened yield curve, which basically diminishes the value of long-term debt and makes it less popular for investors, and therefore bringing down economic activity. So they achieve their goal, but it's like that scalding hot water achievement. They overshoot, and so the economy goes into a recession. Stocks drop, everything drops. And then in their infinite wisdom, they then drop all the rates again and start the whole process over.
Right. And interest rates are supposed to be an indication of the future value of money, right?
That's
So, right. So with interest rates on the longer term debt, when it's really a matter of them pushing into shorter term instruments. But what does that tell you? If interest rates are an indication of the future value of money, and we now have those long term interest rates, and we have since the crisis, at near somewhere, they're rising now clearly, but somewhere near historic lows. What does that tell you about the future value of money?
Well, what they're saying basically is they have less confidence in the future value of money.
Yeah, that's
right?
Exactly right. That's exactly right. But going back to the raising of the interest rates, I mean, it used to be that they did that with the Fed funds rate. But since 2008, when they raise those short-term rates, what they're actually doing is raising interest on the reserves that the banks, basically we funded the reserves for nothing, but it's the interest that they pay the banks for those excess reserves. So as they raise those interest rates, they're paying the banks more to hold those funds in those reserves.
Yeah, it's a neat trick, huh?
Yeah. So what happens when
who
they
benefits? Where does that money go?
I love the fact that you always ask that question. Who benefits? That's like one of the best questions. So why don't you answer that? Who does benefit by that?
You would think that with that infusion of cash, that it would go and go back into the economy, and the idea is that it would spur some more economic activity because you're increasing the supply of money. But the fact is, it went to one place. The only place I saw it go was into fat bonuses for bankers.
Right. And those excess reserves, which are definitely, I mean, they've never held reserves like this because they never got interest rates. They never got interest on those reserves before. So the reason why they're raising the rates is so they can lower them during the next crisis. What do you think the implications might be from that with all those excess reserves in the bank?
Well, we went through this cycle over and over and over again, and we broke that cycle for the first time on this last crash, supposedly because it was so bad, right? So they kept interest rates, short-term interest rates, at zero for the longest time. And in fact, what it did was we didn't get a corresponding rise in long-term rates because people didn't have any
Right.
confidence in the economy. And it
Right.
created, and that, along with these really tough policies, monetary policies by the Obama administration, and regulation, over-regulation, caused an anemic condition throughout the economy. And that's probably one of the reasons why we had such poor growth over those 8 years. I mean, it really is like anemia. I mean, we had no velocity of money. I mean,
Right.
nothing was happening. And they just kept those rates down. And it seemed almost like they were using it as a political tool, in my guess, because Obama could continue to increase the debt without any real deleterious effect because the rates were so low. And then as soon as he's out of office, they start raising rates, or that prospect. Now the cost of debt is starting to skyrocket. And it appears to me, anyways, that they're also using it not only as a monetary policy tool, but also as a political tool, and putting pressure on the incoming administration. I mean, call me a conspiratorialist. I'm not really that type of person, but that's what I mean. It seems plainly obvious to me.
Well, and that could be. I don't typically like to get political. Any of my things, I stay with economics, really, and that's okay, because you get to say anything that you want.
Well, like I said, in my job, I'm trying to constantly analyze not only the global
Right.
economic condition, but also the global political condition, because both have an equal, and sometimes the political condition has a much greater impact on interest rates.
Right.
So it is definitely a real thing.
Definitely. And it is most definitely a real thing. And especially as a trader, and then we can kind of pull that back and talk about the volatility that you've been seeing and experiencing in the interest rate environment. This is the VIX on the 10-year Treasury, and what I find interesting is that it's at the lowest level since they started tracking this ever, right? Mm-hmm. Which is also typical before a big crisis. And, and now look at what's happening, and look at how fat that line is. What do you think the implications of that might be? Can you see that? I don't know that you can see that even. I'm sorry.
No, that's okay. I think that I have your slide here, so let me see if I can.
The Treasury VIX. It's just really reflective of the major amount of volatility in the 10-year Treasury bond, which, as you said earlier, that's the bedrock of the global markets.
Yeah, and it's made it real tough as a trader because volatility is kind of my lifeblood. The more most people are running away from volatility, but I find volatility exactly what I need in order to make money.
Right.
And the
does
amount
Wall
of
Street.
Yeah.
They can make it easy with the excess reserves, but it's the volatility, it's the trading revenues. So.
Yeah, and it has been really tough. As a matter of fact, I've had to alter all my trading strategies, lengthen everything out, because the signal-to-noise ratio has just been squashed. And it's just really tough to eke out something. I went, I'll give you an example. There were times, if you look just in the mid-2016 to 2017, you'll see also a sharp rise in volatility.
Yeah, right there.
Right?
Yeah.
During that period, I had a streak of about 150 trades without any losers, just bam, bam, bam. It was awesome.
Nice. Yep, nice.
And then right after that, it took about 2 or 3 months, right into March, things started to change, and then we started to go into a flattening environment, and things just started to, and on top of that, volatility just went down, and just it never even bubbled up at all. It just continuously down. And so I went through almost a 6-month period where maybe made 3 or 4 trades. I mean, that's the real world effect of this. And so if I can only make 3 or 4 trades, that translates directly into what's happening in the general economy as well. I mean, and that was my, the whole premise that I had, that we were experiencing this sort of anemic condition. There's no volatility. There's nothing to wash out the bad and bring in the new.
Right.
And that is the direct real world effect.
Well, and what you're talking about, that is the real world effect when central banks rule every single market in a synchronized fashion for what they are trying to accomplish. But that had a massive impact on bank earnings since they generate a lot of earnings through trading. So it seems to me, and I could certainly be wrong about this because I can't prove it, but it seems to me that they're doing a very tenuous balancing act. They need to raise those rates because they need to have the ability to lower them. Our economy is certainly not overheating, but they need to be able to lower them into the next crisis to quote unquote stimulate.
Well,
and yet,
I'm going to get a little political here,
okay,
because
go ahead.
that's where I think that's exactly what they're trying to do. They're trying to, quote, stimulate. What they're really doing is they're looking for a power grab. They're looking to spend as much money as they possibly can to, I guess, throw a lasso around people and get them drunk on the idea of all this spending.
Yeah.
And then to finance that spending, they can keep interest rates low.
And so people take on more debt, and corporations take on more debt, and
rely more on the government.
Exactly. But do you think that can never end?
I don't know. I don't know what the limits are. Well, the limit's
based on confidence, isn't it?
Well, yeah, it's all towards a particular goal. How enraptured can you make the people? And at what point is there some place where they decide, I call bullshit?
Okay.
Sorry for swearing. I don't know if this is a family program.
Well, it is. I don't think there are too many 2-year-olds, although my grandson likes to watch the Googie channel, as he calls it. But other than that, I'm pretty sure not too many 4-year-olds are on here. But you bring up a really good point, because we did see, and I've been talking about this a lot lately, but I've also been talking about it since 2008, where central banks have lost confidence in each other. We saw that in 2015 with the Swiss surprise. Banks have lost confidence that they're going to get their money back. We see that as evidence in the interbank lending, and now they're just not even reporting on that anymore. But that already fell out of bed. So the confidence really is in the public.
Yeah, absolutely.
And what they needed. So correct me if because I'm just going to segue into the big topic here. Is this is my philosophy, that they needed time and space and distance to get the new system ready, because they've been calling about a reset for since 2013, and so all of this debt and all of these bubbles in stocks, bonds, real estate, everything, the everything bubble, is about keeping everybody engaged till they can get the new system in place. So I think we need to talk about, blockchain technology and Bitcoin. You have referred to Bitcoin as the Trojan horse. Do you want to expound on that a little bit?
Yeah. Whenever you bring in something big into the market, it has to have some kind of stickiness, and the stickiness of Bitcoin or blockchain was Bitcoin, the sort of new way, this new trusted network that allows you to sort of eliminate that government and third party. And it all sounds so great, because now you're able to finally eliminate all the things that you hate about the monetary system and just deal with people face to face. And now that is what is ushering in the underlying technology, blockchain or distributed ledger technologies, which has a wide range of implications for improving business and making things more efficient. and also potentially opening up new markets. So there's a lot of hope for blockchain and distributed ledger technologies, and a lot of people would even equate it to something akin to the internet, the onslaught of the internet, and may even potentially be a larger potential growth vehicle than the internet itself was. At least that's what I was saying at the beginning.
Mm-hmm.
I was saying that at the beginning too. So those are the Trojans inside the Trojan horse. The Trojan horse is the cryptocurrency that's attracting everybody, and they see this fantastic growth, and they just have to jump onto it and see if they can make some money, because nobody can resist making money, especially when it's going up like. So yeah, that's why I called it the Trojan horse, and plus being Greek, I can identify with that.
Absolutely. Boy, they sure did it, but that's another topic, and maybe we should get together. Do you still have family that lives there?
I do, but I don't know any of them.
Oh, bummer. Okay.
Yeah,
Well,
I'd love to go over there. Everyone in my family's been over there except for me. And
well,
what? I'm really not interested in going there right now. I think the political situation and quite frankly, the Greeks have let me down with their socialist ways, and especially considering their history and what they've brought to civilization. I'm really disappointed with the Greeks right now.
well, okay, but it could be just another Trojan horse that was let in, thank you, Goldman Sachs, via debt and joining the union. Another topic for another day, and a really interesting topic. It's one that I visit all the time. But you also talked about, and I'd like to talk about this a little bit, who writes the rules, who has the power, we talk about the decentralized system, but can you expand on that? Because you are a technologist. I mean, that is your background. So
Yeah.
So from the mouth of a technologist, guys.
It's amazing, though. Sometimes with some of my videos, you wouldn't believe how many comments I get that say, "Hey, Grandpa, go back to your typewriter." Like, you don't know anything. Read up on this technology. You don't know anything. What they don't know is that I've been working with this technology since the 70s. This technology is not new at all. So it's just hilarious. But when you talk about who is actually in control, one of the big benefits, or the supposed benefits, of cryptocurrencies is that it is decentralized. In other words, there isn't any one governing body. But that isn't entirely true. I mean, Bitcoin does have definite centers of power, and there are essentially three. There are the miners. The miners are the ones that actually supposedly bring the security to Bitcoin by processing the transactions for a fee, and so they have a little bit of a motivation there to process things that are profitable to them. So there's that. There are the developers, who most people laud as some of the most talented developers on the face of the planet, which, quite frankly, I find hard to believe, because I've never seen a development organization that's not incentivized that is also simultaneously the most talented. And then there are the people, or which comprise much more than just the people. It includes the average Joe that's investing, as well as the merchants and the other facilities around that are actually, the merchants and the pay processors and that sort of thing. Now, all of them have conflicting needs, right? And so the interesting thing is, in part of the general people, there's also a group of people called the whales, and the whales are the people that have massive positions in Bitcoin because they came on very early. And so what happens is that you can get, and this is my theory, it's very difficult to prove this, but I think it becomes obvious that the whales, in conjunction with the miners, can affect how Bitcoin is transpired. So, it's not as decentralized as people lead on. However, the bigger it gets and the more people that come into it, it does start taking on a life of its own. And it's really probably one of the most interesting experiments in terms of a decentralized technology that has ever been. So you have that, and there's a lot to learn from that.
And it is a big experiment. They haven't finished experimenting, and it's also so who really is in power? I mean, right now in the crypto space, it's not as, I mean, it gets more and more accepted, but right now it's really what, the whales and the miners.
Well, it's not only that, but it's also sovereign nations. Countries can literally cause a type of attack or a type of disruption to the service simply by blanking out people's access to that service. I mean, we saw this happen with China, and it will continue to happen. I mean, there are a lot. Of course, it's very difficult to say that they can have any kind of lasting effect, because after China a few months ago, I think it was back in September, where we had our first real big dip in crypto, because they said that they were going to ban ICOs the first
Right.
time. I think they've since then said it 2 other times. We had our first, well, not our first, probably our third or fourth major dip in Bitcoin. And even to this day, they threaten to restrict access to ICOs and miners, and also people's access to the coin. I think a lot of that has to do with them wanting to also introduce their own cryptocurrency.
Mm-hmm. I would agree with that.
Yeah.
Do you think, what about all of the new SEC rulings, SEC Light, all of that? How does that
Yeah.
play into this?
Yeah. Regulation has a tremendous amount to do with it, although I keep getting the argument that the United States is just, 25% of the cryptoverse. However, the United States is the leader in world economies, and they are also the cultural leader, and virtually everybody follows our lead. And
The moment.
yeah, at the moment,
China.
we-
China's
well,
kind of.
well, we still
Take it over.
wield a lot of power.
We do.
And
It's true.
And when they had the meeting with the Senate Banking Committee, where the SEC chairman and the CFTC chairman were testifying, most of the cryptoverse looked at that very positively, as if they're softening on regulation. But that's not what I heard at all. I heard particularly the SEC chairman say that they're treating cryptos as securities. And there's a general thought that there are two different types of cryptos. There are utility and there are securities. Securities being something like a stock, and utilities being something that may be used in a framework to enact some kind of action, right? And the idea is, from most people in the cryptoverse, is that utilities aren't really a security because they're not like a stock. They're just, a cog in the wheel. But the SEC chairman says that no, he views them all as securities, and that's a fundamental point that I think just glossed right over, because everyone was listening to Giancarlo of the CFTC when he waxed philosophic about his children and how they were finally getting to understand finance because they found something that interests them. Apparently, futures don't interest them,
Right.
even though their dad is the chairman of the CFTC. That the cryptoverse thought that, hey, he really gets it. He's kind of soft on it. He's not going to bring down all this regulation. But what they don't understand is that committee hearing was nothing more than that. It was just sort of voicing their opinions.
Right.
Now they're all going to get together and they're going to decide what to do. Do they continue to treat everything as a security? Do they create more regulation? Do they create more law? And I'm under the impression that, there's probably not a lot more regulation coming, especially since the Trump administration has heralded their idea of cutting down regulation.
Deregulate, right.
Right. So what they're going to do is they're going to adopt existing regulation, which is basically our current securities law. And all cryptos are going to be deemed securities. And so what that means is that the fundamental premise behind the ICO was that the average Joe was able to now finally able to invest in these companies. And there were two benefits to that. One is that the average Joe could benefit from that. And also developers had easy access to capital, which allows them to do innovation. But, there's a lot of risk in that, because there's a lot of scammers that come into this and take advantage of that situation. And I'll tell you, by my estimation, 95% of the ICOs that are out there are complete fraudulent scams. Mm-hmm. And I think that's been proven out. As they start coming up, they really have no business model. They have no market. It's just all kind of fluff. It's very similar to what happened at the beginning of the internet era, where we had virtually anybody that would put a .com at the end of their name. Instantly, money would just get thrown at them. The difference
Right.
is back then when they had IPOs, it was restricted to people who actually were accredited and had experience and money behind them, and they made more informed decisions, supposedly.
I was just going to say. Go ahead. Yeah, I'll let you go. Okay, keep going
Yeah,
because this is great.
yeah, and so at least back then there was, and plus venture capitalists made much more, I guess, more informed, at least from a relative perspective. All right. Today,
Right.
it's just complete, the lid is off. It's just unbelievable. The principal investors in these companies now are millennials, people that have virtually zero experience in business.
Right.
So
Or in
it's a
how
fundamentally
markets work.
different time. And
Mhm.
yeah, now what happened after the dot-com bubble burst in 2001? What happened to 95, well, I'd say 98% of those companies? They don't exist
They
anymore.
don't exist. Right. So
Right.
that brings up a really good question is, how do you know which are legitimate or not? So, and how, for me personally, I'll let the bubble burst and then go in and see who survives. But I really am more of a long-term strategist. What do you think about that whole piece?
I think in general, you have to be extremely skeptical. You have to approach all of these problems and these opportunities with logic and reason, and do your due diligence. Get in there and see whether or not. I mean, it's just like regular or traditional investing. If you wanted to make any significant venture into anything, you're going to first examine the management team, make sure that they have the muster, that they have some experience, they have some record of achievement, that they actually have a market that is viable, and maybe even have a business behind it already and are generating revenue. I can't think of a single, well, actually maybe one or two, ICO or crypto out there right now that can meet any of those. And a lot of them have management teams that are completely anonymous.
Right.
They're, or their credentials were created last week on LinkedIn. Now, there are exceptions. I mean, and there are some that are out there that do have true viability, but there are also some that are completely driven by hype and misunderstanding of the market. And I mean, one particular one that I can think of is Ripple. I mean, Ripple, I think right now is number 3 on the market, the crypto market cap, whatever that means. And they're currently worth, I don't know, 30 or 40 billion dollars. At one point, their value went as high as 105 billion dollars. Now that's very interesting. Ripple is there's a network and then there's a coin. And Ripple, what the whole idea behind it is to enable interbank transactions across international boundaries. And, those types of transactions are very necessary. They're kind of laborious today. It takes a long time to transact just about anything. And there's basically one player in that market right now, and it's called Swift. Now, I know something about this because when I was with Sun, my team, we dealt directly with all the major banks in the world. And alongside all those banks and alongside Sun was IBM Global Services. They were in there as well. And we were implementing and help implement protocols and systems to enable things like Swift. Now, Swift has been around for like 45 years. It's an archaic system, there's no doubt. But Swift, they have something like 12,000 banks in their custodial. But their revenue in 1 year is only $700 million. Okay, now imagine that. 12,000 banks, they make a total of $700 million. Sounds like an okay business, but Now, Ripple's coming in, and they have, I think, 100 test banks, all right? Yet their crypto was valued at one point at $105 billion. Where does that make sense?
Well, this is the era of the unicorns in the markets because of all of that new money. I'm glad they're worried about keeping interest rates low because they might create bubbles. So, yeah, nothing makes sense in these markets, like 99 all over again. Nothing made sense.
Yeah.
Companies don't need to make money. And when you say value, that's the fiat market valuation. That's not its true fundamental value, as you so clearly pointed out.
Right. What it really comes down to is people see a cryptocurrency and it goes up. They're attracted to it like, flies on sugar water.
Yeah, well, it's the
And what
same thing. I
happened?
mean, I was going to say same thing with the stock market going up or anything else going up. People don't do their due diligence. They just assume. They just feel comfortable in that intangible space because we've been in there for so long.
Right. And the thing that they're missing is that you think that Swift is just sort of hanging around saying, "Oh, come
Oh,
and take my business."
right, it's okay with me. Exactly. The central bank's going, yeah, it's okay if we don't control the money anymore.
Yeah, yeah. So that's an example of people just not understanding the business. All they see are the dollars going up.
Right.
They don't even see the dollar. All they see is the chart going like this, and they want to throw their money at it. And quite frankly, you can make a lot of money on a lot of this stuff in the short term, but in the long term, it's going away.
Right. I agree with that. And we're going to take some questions, and some of this may also be in there. But since we're talking about the crypto space, let's talk about the crypto and gold space. Because you made an interesting comment to me prior to the interview, and I'd like to just kind of go over that a little bit.
Sure.
So, we talked about, people thinking that, the cryptos are just like gold, and it did certainly
Store of
the
value.
cryptos, yeah, a store of value because they've been around since 2009, and certainly there was no flight to safety in them when the markets were imploding the beginning of this month. We're now on the last day. So, can you talk about your opinion
Well,
about
trying
that a
to
little bit?
equate cryptos to gold in terms of a store of value, you have to go back and say, well, what's the history? I mean, gold has been around as a store of value in civilization for 5,000 years. It had even in modern history, if you just go back 100 years, you can see that it has retained its relative value in a stable manner since the turn of the 19th, 18th century, or 19th, 20th century, right? There's often that allegory that you can, 1 ounce of gold back in the early 1920s could buy a very nice man's suit. And then today, that same ounce of gold can, again, buy a very nice man's suit, illustrating that it can, in fact, retain its value. And it's proven that over thousands of years. What history does Bitcoin have? It's been around for 10 years, and it has gone up like a hockey stick, actually a very exaggerated hockey stick. It's kind of like
Right.
the opposite. You put the short end down here and then the long end of the stick up like that. There's no it has no history. It has no proof. All it's shown is that it goes through incredible volatility. Now, I don't know how you equate that to a store of value. Now, originally, Bitcoin was thought to be kind of a universal currency. It doesn't act like any currency that I've ever seen.
Right.
You might consider it a speculative asset at best.
Or even an asset at best.
Yeah.
As long as there is market value there.
Sure.
So is it fair to say, and please just be honest with this. So is it fair to say that if you were going to hold wealth for long term through this reset, what would you hold it in? I mean, how
I don't know.
That might be too personal a question. I don't know.
No. But think about that. Okay, so you have this. What you're really putting all your value in is this binary number that's sitting on some electronic ledger, distributed ledger. All right. It's just a bunch of ones and zeros out there. And Bitcoin itself has already been forked, 4 times?
Right.
How many times is it going to be forked over the next year, 5 years, 10 years, 20 years? Will it even exist 20 years from now? How will you get at it?
Yeah, but they say that there's a finite amount of Bitcoin. So what do you mean with all this forking? Isn't there just a small little amount of it?
No, obviously, the only way they can scale it is by forking it. It's kind of obvious. Now, I suppose at some point, if you have enough people and you garner and you maintain that level of excitement with Bitcoin, that the value will maintain or go up and go down over some period of time. But as soon as people lose their confidence in this, it's going to zero. Well, it might not go to zero. It'll always have use with some nefarious party. So it may not, ultimately go to zero. But how are normal people going to store their wealth in this? And where's the intrinsic value? I mean, I thought that when you talk about storing value, it has to be something that has some alternative use. There is zero alternative use for ones and zeros out in the ether.
Right. Exactly. And yet, you were talking about a new fund, and you should talk about what we had talked about, the two new things that you're doing.
All right, so this might seem like...
Because remember, he's a trader. He's a trader.
Right,
okay? That's his thing.
Here's Dr. Jekyll, here's Mr. Hyde.
Right, exactly. And it's both sides, so...
Just because I have this negative opinion about its intrinsic value and its extreme volatility and its tenuousness doesn't mean that you can't make money off of it. In fact, I think that there is a big future for cryptocurrencies of some sort. Over time, that's going to be our future. They're going to figure out how it's going to work. I think that's inevitable. That's where we're going. I don't know when, whether it's going to be next year, 5 years, 10 years, who knows. But there's also blockchain and distributed ledger technologies that are going to take hold. And all of those things do have real potential value, although I still haven't seen it. Did you know that the biggest achievement so far for blockchain has been on the Ethereum network? All right, it's CryptoKitties. CryptoKitties is a virtual. You get to make a virtual cat and then trade it with people, and it comprises over 35% of all the total revenue that has been achieved through Ethereum platforms. All right. Again,
I'm sorry, it's kind of funny.
And on top of that, they've had extreme problems because they've had scalability problems with CryptoKitties. So far, the whole vision of blockchain and Ethereum has just, it's fallen way short. Now, I'm not saying that it's not going to happen. I think there are some wonderful projects that are going on out there. One of them I can think of is Hashgraph, which, by the way, is not on a public ledger. It's completely private, but they have real projects, real money that they're creating, real markets. There are some other projects that make a lot of sense, like Amisigo. Amisigo allows the unbanked to actually have a bank account. There are people that have zero access to a traditional bank or any way to store their value at all. So at least it provides something. And it is backed by an existing company that already has had this business. So it's providing a service. But I'm not seeing too much come out of that. There hasn't been like a killer application or anything that I've seen yet. And it might be just too early, but because in reality, the whole idea behind distributed technology or distributed ledger technologies is still relatively new, even though Bitcoin itself has been around for 10 years. So it's probably going to take a little while before this all kind of emerges. But you go and you look at all the different cryptos out there, like Cardano and EOS and Neo and blah, blah, blah. All these platforms, they have all this wonderful technology, but there's no business behind it. Nothing. Nothing.
Well, we should probably take some questions because it looks like we have a lot of them. Okay, and I'm getting a nod from Megan and numbers from Carl. So, okay, so Paul asks, what about gold-backed cryptos? Actually, I love that question.
Yeah, okay. So first of all, if you have a gold-backed crypto, that implies that you're also going to be able to redeem those cryptos with gold. All right? Mm-hmm. So assuming that you can actually redeem those cryptos for gold, then I don't see that any different than, say, a paper version, like a gold certificate or a silver certificate. And it kind of makes sense. But, does that mean then the crypto itself is pegged to the price of gold? So that would be an interesting thing. And what would the utility be? Is it so that you can use it as sort of a proxy for the actual thing? I mean, there are services out there currently that do that, and will it benefit from being distributed? I can think of like Gold Money, for instance. I don't know if you're familiar with goldmoney.com, but they do something very similar to that. In fact, they take Bitcoin as a payment to buy gold, and a lot of, and I don't know if your company does that or not, but a lot of precious metal dealers are now starting to offer that as a thing. So I guess what it really comes down to is it, if you're going to back it with gold, that means that, like I said, it's a proxy. So the thing isn't really worth anything. It's what it's being backed, or what's backing it is what's worth something. And can you redeem it? And that kind of thing, that brings on something like the petro. Have you heard about the petro, the Venezuela petro? Where?
Go ahead.
Yeah, go ahead. Oh, okay. Yeah, they're so. In their infinite wisdom, they thought that they would come up with, the killer crypto that it was going to be backed by oil. And, of course, that means that you have to trust Venezuela and their communist government that they're going to actually back it and deliver oil on demand, which I highly doubt.
So I do too. So really what you're saying, and tell me if I'm misunderstanding, that, a gold-backed crypto is basically the same thing as an ETF or whatever, but it's a contract. And it requires confidence that who's ever at the other side of that contract will actually live up to their side of the bargain.
Right. So how does distributed ledger technology, the distributed part, the decentralized part, how does that benefit that? There's still some central entity behind it that is guaranteeing the delivery.
Right. So, and we'll talk more about gold-backed cryptos in the future. But Jane asks, how does the interest rate rising affect precious metals?
That's a good question, because it doesn't appear that there is any correlation for the past 10 years.
All in this magically managed market of the central banks. And let's kind of back up in here a little bit, because, most people look at the spot market and think that, oh, well, that's what gold is worth. But that's a contract. And contracts are easily manipulated. And this is where you live your life. So, that does not, in my opinion, any of these things do not reflect the true, actual underlying value, the fundamental value of what an ounce of gold or silver is actually used for.
Yeah. Well, I've got a little bit of a backstory to that, too. And a lot of people will think that, well, it must be the bankers that are manipulating gold and silver and other precious metals. And I'd have to say that maybe, but it may be other forces too. I was a very big investor in gold and platinum futures. I was playing the idea that platinum had lost its premium to gold,
right,
and that it would then regain it, because for 90% of its history, it had always had a premium. Obviously, platinum is always bigger than gold. It's the better gold, right?
Well, and it's more rare, so yeah.
Sure. So I played that spread, thinking that platinum would eventually replace that. And it had all the fundamentals backing that. You go and you look at South Africa, where most of the platinum is mined, I think 70 or 80% of it. And they're going through all this political strife. The mines themselves are underinvested. They're falling apart. There are people actually dying in the mines. The above ground supply is diminishing. Yet gold maintained its premium over platinum all through this. Mm-hmm. And I couldn't figure it out. What in the world is happening? Why isn't platinum rising? It should have just shot above gold like nothing, like a rocket, considering all those fundamentals. The fundamentals were solid. I can't tell you how much research I did. And really what it really came down to was the sentiment of investors. They felt, now as you may know, platinum is the principal component as a catalyst for carbon or petrol-based engines, right?
Mm-hmm.
And primarily platinum is used in diesel, where platinum-based or platinum group metals like palladium and rhodium are used in regular gas engines. And those markets seem to be stable and everything, and the demand is rising. So you would, again, another fundamental thing that you would think, what's going on there. But investors are so enamored with this idea of electric vehicles that they believe that anything else other than electric vehicles, which don't really need platinum, are going to be the future, right? So that, I believe, is the reason, the catalyst, or the underlying sentiment why platinum is undervalued, because they believe electric vehicles are the future, regardless of whether or not they are or not. I mean, there are better alternatives than to have a battery-based vehicle. I mean, you could have a fuel cell-based vehicle. It's far more efficient, and it uses platinum, by the way. But the fact is that Teslas are cool, and
yeah, Teslas are cool, but to kind of so basically, if I'm understanding what you're saying, that it's really hard these days to go with the typical or the traditional technicals for how things will move, because we are in a completely managed market by the central banks. But in theory, just to answer that question, if interest rates rise, then the theory is that more people will invest in U.S. Treasury bonds and hence U.S. dollars, making the dollar stronger and gold weaker, because gold is the primary currency metal. But quite honestly, any other relationship of gold to stocks, for example, because after 71, when they really wanted to start that, perception management, keep people away, they started the spot gold market. But then gold used to be, like a mirror image of stocks. So if stocks went up, gold went down. If stocks went down, gold went up. Well, that was smushed in 2002. And that's really when gold started behaving more like a currency once again. But that has been smushed because a rise in gold price is an indication of a failing currency. So in theory, if they raise the rates, gold should go down, but there is nothing in theory that's really working because the central banks have taken over control of all of the markets. And yes, they can impact consumer sentiment, which can then determine whether or not you buy gold, which of course they don't want you to buy, or if they do, if you are going to do it, they'd rather you not take physical possession of it. And I think that's a lot of what the gold-backed cryptos are about, is, it's the same thing with a gold certificate, as you indicated, right? Why bother to carry that heavy gold? It is such a nuisance. Just take this little piece of paper. It's so light. Oh, wait, you don't even need a paper. It's just a digit out there. How easy, and the easier it is for you to spend, the more you do. And that's really what a lot of this is about, too.
Also, it's easier to, I guess, pretend what's behind there. I mean, who's to really, will these entities, will they be audited? I mean, we don't even audit the Fed.
Exactly.
We don't audit the Treasury. I mean, we have no idea. Who's to say that you can just make up whatever the hell you want?
Oh yeah, we know about all that money that has magically disappeared into those black holes.
Hasn't disappeared in my black hole.
Yeah, exactly.
I want to tap into that black hole.
Exactly. Okay, so Fallon of Ale, if crypto is valued in U.S. dollars, what do you think it will do if the U.S. dollar loses its value?
Well, I mean, the U.S. dollar is, first of all, is going to be orders of magnitude more stable than what most cryptos are valued in, and that's in Bitcoin. So everything is going to be relative to that. So I would say that cryptos would essentially be relative to the U.S. dollar. I mean, ultimately, when you're using a crypto or any cryptocurrency, in order to realize the gain, the only way to realize it, because it's virtually unusable in the market, is to realize it in U.S. dollars or whatever your
or
local
wherever the
currency
currency is, right?
Yeah, yeah. So it's going to be basically proportional, I think, to the U.S. dollar.
Well, keep in mind that a trillion times zero is still zero. So, it really, in my opinion, it kind of depends, because really a trillion times zero is zero, but it's not that the dollar itself has any value. It actually only has value when you convert it into something. So
Well,
I think it'll
the
depend on
dollar.
adoption.
Yeah, I would say that the dollar has value, or the supposed value of the dollar really is the backing of the United States, the good faith and will and the army of the United States,
And the ability to grow more debt.
and the
Full faith
ability
and
to squash
credit.
anybody, or the ability to squash anybody that tries to screw with us.
Right. Jody asks, should we hold lots of dollars or gold?
Well, you need both. I mean, you need dollars in order to pay your bills and stuff like that. You should buy gold, I think, to store your wealth. But gold should only be a portion of the type of things, the tangible assets that are probably good choices to store your wealth. I mean, you may also look at. I mean, I like income producing property or investment grade collectibles. I mean, but gold should be a portion of that, obviously.
The only thing you have to realize with investment grade real estate right now is, do you think that's overvalued?
Yeah, well, right now it's overvalued, but over the
Right.
long term, I mean,
It won't be.
and if it
Right.
produces income,
That can help. Although in a reset, it's going to be interesting to see everything that happens. My bet is history is going to repeat itself. I could be
yeah.
wrong. I mean, I can't control that. And
But I
at least
also like,
today, I'm not queen.
yeah, but I also like collectibles too.
I do
Whether
too.
it's antiques, art, rare coins, rare automobiles, anything like that that seems to have a fantastic. All of those seem to be fantastic stores of value. As a matter of fact, you should just look at who are the people who are using those things to store their value. It's basically the one
Exactly.
percenters.
Exactly. I hear a lot that nobody wants that stuff anymore. Yeah, well, didn't the Saudi prince just pay how much for the Rembrandt? Okay, so that's not really true. You're absolutely right. That's how the 1% store their wealth, and they are tangible, and you own them without contract.
That's right.
So Joe asks, do you expect the Fed to continue to buy mortgage-backed securities while increasing rates, playing both sides of the fence? I
Yeah,
do.
yeah, yeah. I mean, what other asset do they have?
Right. So here's a good question for you. Andrew asks, what happens when the 10-year hits 3%?
Well, I don't know that 3% is necessarily a magic number. It all depends on what long-term rates do. If it hits 3% and long-term rates don't go up, I think then we have a problem. But if we have what you call a parallax move or longer-term rates rise, then we can probably support it. But that would also imply, and hopefully, our economy would kick up, GDP would increase. Then you don't have a problem. It's all relative. What's happening with the rest of the assets?
Okay, well, I'm told that I'm supposed to wrap it up. I do have so many more questions, so we're going to have to continue this. But I'd like to give you an opportunity to talk about anything else now that you want our viewers to know about you and how they can reach you, although we've posted all of the links that we had, but what would you like them to know?
Well, thank you very much. I really enjoyed my time here, by the way. It was great.
Yeah, me too.
I have a YouTube channel. It's called Trader of Futures, and it's growing. I talk mostly these days about crypto because that's what interests me and that's what's hot. I have a Twitter account by the same name, Trader of Futures. And I have a new project that I'm starting out called juntocoin.com, which is a crypto investment club. where the members of the club get to choose or select how the funds or the club portfolio is traded, and that's kind of interesting. And very soon, maybe I shouldn't talk about the hedge fund, but there will be a hedge fund in the near future that I'm starting up with some outside investors. But that's about it.
Okay. Well, this has really been great, Ernie. Thank you so much for coming on. And for all of our viewers, if you like this, I'm giving it a thumbs up. I thought you did a great job. It was interesting. I'm going to have you back on. I want to talk more about interest rate futures for sure. And
love having coffee with you.
Good. Good. But we got to get you one of these. Yeah, absolutely. Make sure Megan has your address. So if to follow anything that we're doing here, subscribe to our YouTube channel, give us a thumbs up, and of course you can follow us on all of the social media. Megan does a great job in letting you know what's going on. And speaking of which,
quick change, and immediately following this, you are going to be doing
okay.
The crowd.
Why don't you? Oh, okay. So immediately finishing this, there's nothing up there for me to read, Megan. Okay, sorry about that, you guys. But immediately finishing this, okay, now it is.
Crowdsource the Futures YouTube channel.
Okay, okay. So right after this, I'm going to be at Crowdsource the Futures. Truth.
Crowdsource the Truth. YouTube channel. I'll post links.
Okay, Megan's going to post the links now, and if you have any questions about anything, give Ernie a call, give us a call. We have all of his links and access, and of course, we're always here to be of service, and please be safe out there. See you in a few minutes. Bye-bye. Bye, Ernie. Thanks.
Bye.